Good morning, everyone, and welcome to the European Crossover webinar. And we did see the dollar index come under some pressure yesterday. We did have our bias chart support 96.79, so the low was not bad. I mean, 95.79. Low was 95, I guess 77, 78. Okay, wasn't too bad. And we did see the euro. We had discussed in the webinar about it reaching up to that level, and made some comparisons about volume. And we did see this market kind of post a gravestone doji and pair back a little bit, but we're still very, very strong here with the euro. Let's see, it's still up in here in the stratosphere. And we saw dollar CAD come off quite a bit. We did have Bank of Canada meeting yesterday, but that really wasn't much of a surprise. Index stayed, although they mid-move around, stayed in a relatively tight range somewhat. You can see here with the NASDAQ, and look at the S&Ps also. So we had dipped, and but overall a little bit tighter range, and we have seen NASDAQ pair back towards the lower end, but nothing of any big moves. I am expecting a little bit better moves today in the NASDAQ, or some potential setup moves. We've been drifting a little bit lower. But even then, like I said, you can see here, even since Asian session, it's still been, look at this 40 handle range, which isn't nothing necessarily to sneeze about, but considering the big ranges we've had, it's relatively quiet here. May not see anything develop until we get into the U.S. session. So we'll take a look at what we are. Data, probably be a relatively faster paced webinar. Looking into today's data, we did get UK employment data. As well as French CPI, Italian inflation, and we do have the ECB later today. So probably can stay relatively quiet until then. Of course, we have our initial jobless claims, as well as Philly Fed index at 8:30 Eastern, and retail sales. And NHB housing at 10 a.m. So a decent amount of data. We'll probably stay a relatively quiet range until ECB. We're going to move into the news then. Once again, probably go through a quicker pace today. Not a whole lot of movement. The Australian New Zealand dollar stumble at resistance as mixed data fails to cheer. The Australian New Zealand dollars eased back on Thursday as domestic and Chinese economic news proved too much to provide the impetus needed to crack major chart resistance. The Aussie dipped to 69 even, having topped out at a 5-week high of 70.38, and it's a dip to 69.90. I was going to say, wow, 69. It again stalled short of the June peak of 70.69, reinforcing the importance of that barrier. The Kiwi faced 65, faded to 65.56, and then again failed to clear resistance around 66 even. Both tried to rally when data showed the Chinese economy rebounded by more than expected in the June quarter, only to be frustrated by disappointing retail sales outcome. Domestic figures show employment rebounded by a record 210,800 in June as the economy reopened, but even more people resumed looking for work. So the jobless rate actually rose to 7.4 from 7.1. Report that plenty for bulls and bears with hours worked surged a hefty 4%, but all the jobs created being part-time. The future was clouded with the lockdown in Melbourne for 6 weeks as Victoria struggled to contain a new viral outbreak. This isn't usually an optimal mix. However, it does reflect an economy getting back on its feet as employers start to re-empty back or re-employ back part-time staff, said Kerry Craig. Broadly, these trends should continue in the months ahead, albeit with state-level differences given the level 3 restrictions in place in Melbourne as participation can't even speak, damn it. As the participation rate rises along with the jobs gained. Across in New Zealand, figures showed consumer prices fell 0.5% in the June quarter, first drop in 4 years, while annual inflation slowed to 1.5% from 2.5%. Recessions kill inflation, and we expect inflation to continue to fade over the remainder of this year and into next, said Mary Jo Vergara with Kiwi Bank. Deflation pressure demands monetary policy to remain expansionary for the foreseeable future, she added, predicting the RBNZ would again expand its bond buying campaign likely in August. The RBNZ is already committed to buying 60 billion New Zealand dollars of debt, but Kiwi Bank expects that to rise toward 100 billion. A term funding facility for banks could also help lower borrowing costs. Dollar firms as China retail sales sound warning. The dollar support on Thursday is simmering Sino-U.S. tensions as weak Chinese consumption data knocked investors' faith in fairly swift global recovery from the coronavirus. China's 3.2% economic growth last quarter easily beat market expectations for 2.5%, but an unexpected drop in retail sales for the fifth straight month was an unwelcome harbinger of possible problems ahead for the rest of the world as more countries relax lockdowns to allow businesses to reopen. The growth-sensitive Australian dollar slipped under 70 cents after the data, and the greenback clambered off an overnight one-month low against a basket of currencies. Well, in general, it's fair to say the numbers beat expectations. What the numbers also reveal is that we're seeing the China consumer remains behind, said National Australian FX strategist Rodrigo Catril. That cautiousness is something the market is looking at in terms of countries where the consumer plays a bigger role, so it's obviously relevant for the U.S. as well. The Aussie was last down 0.3 at 69.88, Kiwi at 65.57, and the Chinese yuan fell off a 4-month high in offshore trade. Surging U.S. coronavirus cases were also dampened sentiment and weighed on equity markets as focus shifts to Europe and the region's recovery plans, as well as rising global tensions. Britain on Wednesday ordered that equipment from Chinese Huawei be purged from its communications network by 2027, prompted a warning from Beijing while China and the U.S. are at loggerheads over issues from trade to technology. President Trump has not ruled out additional sanctions on top of Chinese officials over Beijing's crackdown in Hong Kong. New York Times also reported the administration considered a sweeping ban on travel to the United States by Chinese Communist Party members, citing 4 unnamed people with knowledge of such discussions. The cautious drift in market recouped some of the dollar's losses this week as investors had cheered promising progress towards a coronavirus vaccine, pulling most majors back towards ranges they had marked for more than a month. The broad dollar is at a crossroads. FX strategist Terence Wu said, "It's under pressure, but its near-term fate," he said, rests with the euro and the outcome of today's ECB meeting and the weekend's EU summit. The ECB, all but certain to keep policy on hold on Tuesday, would keep the pressure on political leaders to agree to a recovery plan at the Friday Saturday conference in Brussels. Any deal requires bridging a gap between the thrifty northern countries and the high debt south that has taken the brunt of the COVID crisis. The ECB delivers its decision. In our view, the euro can sustain its move beyond 14, and if the EU leaders agree on the proposed EU-wide recovery fund. Elsewhere, the pound dipped 4 tenths or 2 tenths to 25.57, but the safe haven Swissy was kept under pressure. And moving into the morning bid. So much for the China-led recovery. Data that China's economy returned to the growth in the June quarter, expanded by a better than expected 3.2% as the lockdown measures ended, and did little to boost nervous global markets. World stock markets are struggling after China climbed to a 5-month high, with Asian stocks broadly in the red. US and European stock futures are down, and risky currencies, including the British pound, Aussie, Kiwi, are weaker. Well, like I said, we are seeing that downside drift that I referenced, and bear with me. So you can see here with the Kiwi, with the Nasdaq, we're just basically in a drift mode lower. Same thing here with the SPOOs. See that here? Just drifting lower since the upper. Look at that. Beyond China's upbeat gross domestic product numbers, a drop in consumption suggests a bumpy global outlook ahead. Retail sales fell 1.8% year on year. Surge in infection rates is also undermining the sentiment and keeping safe haven 10-year yields pinned within a sight of a 3-month low of 0.62%. A pivotal period for the Euro watchers begins with ECB following the European Union summit on Friday and Saturday. The ECB is widely expected to leave policy unchanged. Single currency reached a 4-month high against the US dollar on Wednesday, but it could see more volatility heading into the summit, and will try to reach agreement on the pandemic rescue fund. With that, we'll just go and move into the analysis. Should be relatively quick today. There's just not a whole lot happening other than, like I said, we've seen that the drift lower. So the euro, after another push to new highs, taking out 1436, posted a gravestone doji. Support comes in at 1353 with resistance at 1450. Cable clawed back above the resistance level of 2602, but was unable to take out the recent highs, and you can see them clearly right there. Resistance will be 2667 with support at 2506. moving on to the Aussie. This thing is just like a helium balloon. It just doesn't want to come down. And we did press the 70.27 area here. That is going to be remaining resistance, or will remain resistance, 70.27, and support will be 69.07. So no changes here in the Aussie. Let's go move into the Kiwi. So the Kiwi rebounded on Wednesday, but has been unable to take out the standard or the resistance at 65.94. Support for Thursday will be 65.17. So you can see the 65.94 here remains resistance. Only difference is we'll move the support to 65.17. The dollar CAD saw a strong reversal on Wednesday with its lowest close of 4 weeks. Support will be 34.68 with resistance at 35.40. And moving on to the peso. The dollar peso continued its slide on Wednesday, opening a challenge on Thursday to 22.17. Resistance will be 22.50. As I said, it's relatively quiet this time. And let's go move on to the dollar yen. Okay, and thanks, Marco. Yeah, I had it on the FX, on the stock indices. Thanks for letting me know that. And we'll just take a quick look at the Kiwi. Once again, we're not seeing much of a change. There's the Kiwi. So we said resistance, we did see a rebound. Resistance remains 65.94. And the only difference is that support will be 65.17. And from there, we move on to the dollar CAD. We recovered that. We saw the big look right here. The dollar CAD saw a strong reversal on Wednesday with its lowest close of 4 weeks. Look at that. We took out even the prior lows. Look at that. So it's covering 4 weeks. Support will be 34.68 with resistance at 35.40. And moving back into the dollar peso. The dollar peso continued its slide on Wednesday because we started that on Tuesday. Remember, we saw this bearish engulfing bar, which opened the door for us to move lower. We certainly saw that. That opens a challenge to 22.17. You can see 22.17 here with resistance at 22.50. With that, we'll move into the dollar yen. And the dollar yen posted a sharp move down on Wednesday, although recovering off the lows to remain sub 107 on the close. Support will be 676 with resistance at 734. And we'll move into the cash dollar index. The dollar index pushed below 96 even, but remained to hold bias chart support at 96.79. The low was 95.70. I did get that wrong. 95.79. The low was 95.78. So pretty good, not bad. Actually, even had it lower. Apparently, we had it down to 95.71. Thought we had 79, but 71, and the low was 70. Let's see, the low was let's see, right there, 77. So it wasn't too far off. Resistance will be 96.42. Well, we had 43, so we'll just leave that there, and support at 95.71, which is what we had. So all good. It's going to stay there. With that, we'll move into the cross rates. Like I said, it's fairly quiet morning. I don't expect this to move too much until we get past ECB. Plus, a lot of this stuff is just simply not happening until you get into the U.S. session. We do get some early moves on the initial early move of the session here in European trading, like in the euro and the cable. But other than that, going to stay. It appears it will stay relatively quiet. Looking at the Kiwi yen. No changes here. Look at that. We're dead as a doornail. So no changes here in the Kiwi yen from yesterday. 70.51 on the upside. 69.30 on the downside. And we are just dead. Look at that. How tight that range is. Let's move into the euro yen. You remember we had this 22.64. And we weren't able to, well, we did actually move higher yesterday, but we didn't get beyond that. So we'll keep the 22.64 for now because once again with ECB, we could see some moves really start to push. But that'll be resistance, and support is going to remain 21.81. We'll actually open it a little bit lower. We'll move back into this level, which is 21.51. So we will lower that a bit because once again, we do have the EU summit. We could see this weaken a bit between here and there. Euro, after posting this little mini gravestone, did dip back yesterday. Looking at support, we had 62.54. The low was 62.55. Okay, not bad, not quite bad. And we'll keep the only thing is we will move the resistance, and that will come in right there with this body close, which is going to be 63.81. And move on to the Euro Kiwi. We ended up reversing a bit of these gains with a dark cloud cover. Resistance was 75 even. And considering it's a euro, we're going to go and keep that because we can still push towards maybe towards the end of the week. And support we had was 73.26. We'll go and keep that also, 73.26 with the euro Kiwi. Moving on to the Aussie yen. So you can see not a whole lot of movement. We did keep the 74.97 here with the euro Kiwi. And support will be 74.28. And that's going to remain the same. So we're just not seeing a whole lot of movement. Equities were, to a certain extent, a bit subdued yesterday. We had resistance yesterday at 35.30. We did make it up here to 35.10. So keeping it somewhat in check. And on the downside, 33.86. Low today's been 34.04. So there's not going to be any changes. So low today so far is 30.44. This will remain the same, 33.86 for support. And on to the sterling odd. Well, after a little bit of a brief run up here, we're remaining under pressure. We're at 79.12. The low so far today is 79.21. So we'll keep the 79.12. That even looked a little bit low, but I guess not. We're still pressing lower. On the upside, that will be the difference. You see this close right here? That's going to be the high, our bias chart resistance, which will be right there, 80.56. And that's going to do it for FX. As I said, relatively quiet session. Mark asked about the Dow, so we'll take a quick look at that. Let me take a look because I only have it on the 30-minute. I don't even look at it too much any further. We'll take a look here. We did come, as you can see here. Remember yesterday we were right there, and I said, "Here's that zone," and we went right into that zone. We actually touched the upper portion of the zone before coming off. Almost looks like a little bit of a head and shoulders here. You see that? So this wasn't bad here. We were right there to 78%. And you see right there, right when we were doing the webinar, right there, right here. And we dipped back a little bit. I said, potentially we can get into the zone. And they went right to the tip top of that zone. See right there? And then they paired back a decent amount. Look at that. So they got into the zone here. This is right before the equity open, cash equity open, and from there it was down. It kind of looks a little bit like a head and shoulders, a little bit almost. Which would probably make a move down here then. But we are looking weaker. At this point now, probably resistance is going to come in right in here. Immediate resistance, 26,750 right there. And I don't know if we'll make it all the way back up here. At this point, if you got beyond 26,827, just be So you wouldn't want it to get above here and get a close, and that would be 26,845. But it certainly looks like we're open to move lower. This almost looks like a little bit of a head and shoulders, but we don't have a very good defined neckline. But that would probably suggest a move like here to here, which would probably move right to there, down here. But it certainly looks weaker, so really any moves coming back up to 26,706 right there is areas where you'd want to start to fade. And you wouldn't want it to close above 26,845 on the 30-minute close. But shorts to be taken initially right here into this area and look for a move down here, 26,290. And I'll just pull this over here just to see where we stand on gold, 30-minute. So we're just still hanging around here. We've already had a pretty good run here in gold, so maybe they need to pull back a little bit further. I guess the key will be right here, sub 1800, like let's say 1798 on a pullback. And if they do break, that would open the door for lower from a technical standpoint. But it needs to go and hold that. Probably would have thought that we'd be up a little bit higher. So on a pullback, look for them to try and defend this area. But if we get below 1795, that would break this trend line. Really opens the door for them to come back down to about, probably about 1768-ish. Yeah, it looks like we're going to be quiet until ECB. So that'll wrap it up. Relatively quiet session. And thanks for joining us here on the European Crossover webinar.